Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Power Breakfast. We are in the Mumbai News Centre. I'm Nigel D'Souza and with me, Anisha Jain. Hey Anisha, good morning.
Good morning, Nigel. Well, yesterday was the day of another record highs, but today the global cues are not really that supportive, right?
That's right, and a couple of result disappointments as well. Tata Steel, a bit of a miss over there, but it's the end of the month, so it's good. It's payday as well. Plenty of result reactions though, and as you said, what a good run we have had. 10,000 we thought we'll stop at 10,100, 200, 300. Wow, 10,400 is almost here. Let's see where we go from here.
Well, yes, and levels of 10,500 is also not far away as per some experts. But let's see when that happens. First up, let's take a look at the top headlines at this hour. US markets breaks its record-making spree on reports that US corporate tax rate would be cut gradually. Asia opens mixed and the SGX Nifty indicates a flat start for the Nifty.
Well, we told you first, and now it's official. The $12 billion proposed merger between IDFC and the Shriram Group is scrapped. Both parties failed to find common ground on valuations.
After shutting down its 2G business, Reliance Communications announces a 17,000 crore rupee debt restructuring plan, reveals that the company will be sold to investors after the reject, claims that Reliance Jio is interested in several of its assets.
And Tata Steel's second quarter performance misses street expectations as, in fact, European business struggles due to lower spreads and higher raw material costs. The Indian EBITDA per ton as well comes in at the lower end of expectations. While for Bharti Infratel, the top line and the EBITDA meet expectations, while in fact the profitability takes a bit of a miss owing to lower finance income and higher tax.
In big earnings to watch today, analysts expect a subdued quarter for Bharti Airtel as heightened competition will impact India business. Dr. Reddy's too is expected to report second quarter earnings today. Quarter-on-quarter recovery in margins and profit will be the key factor to watch out for.
Also on the show today, has it become easier to do business in India? Sources in the government say that they're hopeful of a big jump in the World Bank's ease of doing business rankings that are scheduled to be released later today. Well, first up, let's take a quick check on the Asian markets. Remember, those markets are more or less mixed. Weak cues coming in from Wall Street overnight. The Nikkei is under some pressure today. Remember, the Japanese markets, they slid in early trade, a little bit nervous ahead of the Bank of Japan's interest rate decision. That'll come out in the next few hours, and that market, in fact, is taking a bit of a knock. It's down closer around 0.5%. Well, shifting focus, then if we take a look at the Kospi, that was holding mildly in the green. It's still holding with a gain of around 0.1%. And the other couple of markets, in fact, we did see a bit of a mixed opening, both on the Straits as well as the Taiwanese index. Let's get both of them up for you on the screen. So, fair to say that Asia is really a mixed bag in early trade. On the economic data front, though, China's manufacturing PMI data for the month of October, that came in at around 51.6, and that's a tad bit lower what the street was working with. Asian markets mixed. SGX Nifty comes up for you on the screen as well. Let's see what the early indications are. Maybe a 25-point downtick is what we could see just to kickstart trade.
Okay, and in the US market, the Wall Street pulled back from record levels, weighed down by a drop in shares of Merck and a report that US lawmakers are discussing a gradual phase-in of the much-anticipated corporate tax cuts. The S&P 500 ended around 0.3% lower following the report, while the Dow Jones declined around 86 points. The tech-heavy Nasdaq touched an intraday record high earlier in the session before pulling back. But staying with the news from US then, the special prosecutor probing alleged links between Donald Trump's campaign and Russian government has filed his first charges. Now in the line of fire is Trump's former campaign chief, Paul Manafort. He has been told to surrender by Special Prosecutor Robert Mueller along with one of his business associates. Now, Manafort was hired to run the day-to-day operations of Donald Trump's bid for presidency way back in March 2016. 4 months later, reports emerged that he received $12 million in undisclosed payments from a former Ukrainian president who is known to have close ties with Russia. Trump fired Manafort soon after this news report came out. And now Manafort is facing serious charges. And this is also a major embarrassment for Donald Trump and his presidency.
Okay, then on that note, let's listen in to some expert opinion on the road ahead for the U.S. markets.
Fundamentals remain robust. Earnings are growing, certainly at a slower pace than they were in Q1 and Q2, but it looks from my data that we could be at +6, +7, +8% for the S&P Q3 earnings by the time earnings season is over. That's still a very respectable number. That's very close to the long-term trend. And liquidity conditions are still very accommodative, although they are starting to tighten a little bit with the dollar up and the Fed leaning more hawkish. The stock market, to me, when I look at what causes a cycle to end, it's ultimately inflation, and then what causes a cycle downturn to get bad, it's excessive leverage. And we have neither inflation nor, in my opinion, excessive leverage. So my sense is that the fundamentals continue, but at a more moderating pace. So I don't think we're going to repeat the kind of rally we've seen over the past year and a half. But that doesn't mean we're going to have a correction or a bear market either, although obviously a correction could happen at any time. But moderating fundamentals, I think, still suggest a decent market.
It's not rising rates that concern us because we think that's priced into the market and everyone seems comfortable and at ease with that. It's when does central bank roll-off of the balance sheet starts to hit liquidity and hit the markets. You know, kicking the can down the road, that's October 2018. That's when the big four central banks on net, we're going to have central bank balance sheets declining to a point where that could start to affect markets. But that's a year from now.
Well, turning attention to the European markets, then they ended more or less mixed in trade yesterday. The FTSE, that was relative underperformer in trade, that ended with a cut of close around 0.2%. What they were reacting to yesterday was really the corporate earnings, and they also continued to monitor news that's coming out of Spain and the United States. Remember the Spanish index, that rebounded big time. It ended higher to end with a gain of around 2.5% in trade yesterday. But a quick check on the emerging markets then. The Brazilian index, that was the one that took a sharp knock in trade yesterday. It was down close to around 1.5%. The Russian index, though, relative outperformer between the emerging market basket.
Well, let's shift focus then to the currency space. The dollar steadies after declining against a basket of currencies overnight following the tax cut news. The U.S. currency was also weighed down as Treasury yields slipped on news reports that President Trump is likely to appoint Federal Reserve Governor Jerome Powell, who is viewed as more dovish than other contenders, as the next head of the Federal Reserve.
And in the world of commodities, and crude oil prices managed to hold just below their recent peaks after being boosted by expectations of an OPEC-led production cuts that could be extended beyond March. However, Brent crude prices are still holding closer towards the $61 per barrel mark.
And from the precious metal space, the gold steadies ahead of news from central banks, which includes President Donald Trump's expected announcement of the next Federal Reserve chair. Policy meetings of Federal Open Market Committee, Bank of England and Bank of Japan due later also put investors on the sidelines.
On Dalal Street in yesterday's trading session, the Nifty ended above the 10,350 level. The Sensex hit a century. It was up more than 100 points. And amongst the broader markets, in fact, we had the mid-caps. They outperformed yesterday. That index, in fact, ended with a gain of close to around 1%. The Bank Nifty, though, ended just shy of that 25,000 mark. But Anisha, early this morning, we have got some cues that are not too great. The US markets, well, we saw some profit booking that came about. The bond yields as well, I think, they have spiked up. How are you reading trade setup today?
Well, yes, it looks like it's going to be a subdued start, at least initially, because the SGX Nifty is also suggesting a 20-25 point downtick. But if you look at yesterday, yes, the record runs really continues. And the good news is that the move has been secular. At least yesterday, all the sectors were doing well, and not just PSU banks or the energy stocks that were leading the way. Of course, the mid-cap index also surged over 1%. And we saw that the advanced decline ratio was also positive. In terms of the Bank Nifty as well, that one was up around 0.6%. But if you really take a look at the flow pitch picture, it continues to be a net sell market because the FII sold around 186 crores in equities, whereas the DI has bought around 140 crores. If you look at the global cues, Nigel, as you were mentioning, they look a bit subdued. The cues from the mother market are not that great because we saw that the Dow as well as S&P closed around 0.3% lower. Nasdaq pretty much flattish. That because the street is a bit nervous because there have been some talks about the tax cuts being coming in a phased manner. There are also talks that Donald Trump is expected to announce his choice of the next Fed chair this Thursday. And also, of course, the FOMC meet really begins today. Though the decision will come tomorrow, probably the investors are sitting on the sidelines for that one. European markets as well close a tad bit mixed. If you look at Asia right now, Japan is really coming under a bit of pressure because Nikkei was down around 0.4% lower. That because, of course, the Bank of Japan is expected to come out with interest rate decisions today. If you look at most of the economists, they are not really expecting a Bank of Japan to change its aggressive monetary easing program, so that is not expected to change much. But if you look at the other index that are trading, so Taiwan is expected to come out with its Q3 GDP number right now, so that one is in focus as well. That one is trading with gain of around 20 points right now. But other than that, China's official PMI manufacturing data has come in at 51.6 versus an expectation of 50. So maybe just a tad of nervousness might come into that market a bit lower. SGX Nifty for right now is indicating a 20-point downtick, but clearly earnings will be really the focus of the domestic markets because that is the cue that is really driving the markets, Nigel.
Absolutely, Anisha. And let's take that point forward then. Earnings, you said, is going to be taking center stage. Tell us some stocks that we can look at.
Well, yes, I'll come to earnings in just a bit. First of all, I'd like to start with the IDFC Shriram Transport deal. Yes, IDFC came out with numbers as well, but the focus would be on the fact that the deal has been called off, something that we have been telling you earlier, and now it has been made official. Other than that, Reliance Communication is also looking at an asset monetization plan and a debt rejig, wherein they're expecting to pay off the debt of around 17,000 odd crores, so that might be in focus as well. Now, talking about earnings, in terms of earnings that are expected to come today, we have the biggies of the likes of Bharti Airtel, Dr. Reddy's, Interglobe Aviation or Indigo that are expected to come with numbers today. From the broader markets, we have Dabur India as well as Blue Star, JSW Steel, Divi's Laboratories, Capital First, IDBI Bank, as well as Escorts and Symphony. In terms of the earnings reaction that we will see today, yes, as you were telling us, Tata Steel is a bit of miss. India business came at a lower end of expectations, and the European business also really didn't perform that well. Other than that, Bharti Infratel, yes, in line, but a bit of muted quarter. The revenue is up 11%, but the profit, because of the higher finance cost, is lower. Central Bank of India, the company continues to report loss, but the decline in slippages might be just a tad bit of silver lining there. Syntex, weak quarter because the margins declined a bit and the profit after tax is down 37%. KPR Mills, weak number as well. Astra Microwave, the performance just keeps on deteriorating. The profit after tax is down about 66% there. On the flip side, Bharat Electronics, that should stand out today. A very strong set of numbers coming in, very strong revenue execution, and that's why that's up around 38%. Lakshmi Machine Works, good set of numbers, and so is the case with Balaji Mines as well. Other than that, just a few of news coming in for some of these stocks. There's a Supreme Court hearing for the Fortis stake sale matter, so that might be in focus. Zen Technologies has bagged an order worth around 224 crores. We have a Madhuri Chemicals where the board meet is there on November 2nd to decide on the QIP, so that might be in focus as well. And lastly, Thomas Cook has acquired 100% stake is one of the small companies. Not a very big news, but the stock might just be in focus.
Okay, Anisha, thanks so much for that. Well, as Anisha said, CNBC TV18's newsbreak is confirmed that the IDFC Shriram merger has been called off. Details on that big cooperative exclusive when we return. Stay with us.
Well, we told you first and now it is official. The board of IDFC has decided to call off its proposed merger with the Shriram Group. Nisha Poddar, who broke this story first last week, joins us now. Nisha, you have been on top of the story, but tell us now what went wrong with this deal.
This is the second large attempt at consolidation in the financial services space, which has been called off, which has really failed. First was HDFC Life, Max Life merger. Now this one IDFC Shriram $12 billion transaction, merger of two big conglomerates, so to say, in the financial services space has been called off because of insurmountable pressure coming in from shareholders. And here it became more grave and intense because the shareholders of both IDFC and Shriram were unagreeable to the terms of the negotiations in terms of valuations as well as the structure of the deal. While the companies, the managements of both the companies did make several attempts over the last 4 months to really pacify the shareholders, even in changing the structure and keeping Shriram Transport Finance out of the entire merger, it did not go down well, especially because of the IDFC shareholders putting their foot down and asking for 104 rupees share price for IDFC Limited, which is a huge premium to the current market price. So finally, the deal has been called off. This was in the waiting for a long time. The market has been expecting, but we had been responsible in not putting this out till we thought that there were no attempts being made and all the options for the management is over to pacify the shareholders. So last week we did really report that this deal is expected to be called off before the extended exclusivity period of 8th of November, and that's exactly what has happened right now. So the deal called off. What IDFC really loses out is as a bank, as a new bank, the retail footprint of Shriram Group would have enhanced their portfolio and made it grow. On the other side, for Shriram Group, it loses out on the opportunity of being part of a bank and also taking advantage of lower cost of funds. But all said, they both will continue to look at various opportunities when it comes to mergers and acquisitions.
Okay, Nisha, thanks so much for that. Well, let's move on then. Debt-laden Reliance Communications lenders have approved the telecom firm's debt restructuring proposal, which they call a zero-loan write-off plan. Now, post the debt restructuring, the new Reliance Communications will be sold off. The company has also claimed that Reliance Jio is interested in acquiring some of its assets. Kritika Saxena caught up with the ED of Reliance Communications and began by asking him about the debt restructuring plan.
I think the way you look at in terms of timeline for conversion, the reference date for SDR, which is governed by the RBI guideline, was 2nd of June, and the end date for that is 28th of December, by when the lenders have to convert the equity. Of course, it could happen much earlier than that, but that's up to the lender when they want to do during this period. They can do it any time.
But what was the conversation that you had with lenders so far as to what timeline they are looking at for the equity conversion?
I think each of the lender has to go to their board and go to the sanctioning authority and take their sanction. And some, the foreign lenders, Indian lenders, both are involved. So all of them have the different timeline. But we believe we will do much ahead of the deadline, and sometime in December. The company is targeting in December first week, but I would say it could happen anytime between that and 28th of December.
Okay, you spoke about 17,000 crore rupees repayment. March 2018 is a comfortable timeline to be able to bring that. I don't want to go to the details, you've already specified that, but 17,000 crore March 2018, is that a realistic timeline? And if you were to extend that, how much longer would that take?
Okay, so as per RBI guideline, we have time until December 2018, but management team is targeting to achieve that, the whole monetization program 9 months ahead of the deadline, which is by March 2018. And management team is pretty confident to close all the deals and, getting cash during this period.
To clarify again on the point that you had made in the press conference, that essentially means that after the entire SDR process is done, Anil Ambani and the Reliance Group will be moving out of the telecom business. Am I correct in that?
I think the way I would clarify, the RBI guideline requires on conversion that banks have to get 51% a change of control and change of management. And I think we would be complying to that guideline, and banks will be finding out, and together with the management team, a new buyer for that. So obviously, ADA would be part of the public shareholder once the change of control takes place.
So where does Jio come in? Since you took Jio's name, and I know that there is an NDA agreement, so I wouldn't want you to go into the details, but does Jio come in here in the spectrum trading and sharing bit, or does it come in later when there is a 51% sale by the lenders?
I know, we also love Jio as much as you love Jio, But I think when we look at the Jio, we have a spectrum sharing arrangement and we have separate, several infrastructure deal with them. And I think we look at it that they would be obviously, interested in that. Like in tower, they are the largest user of that. Yeah. So I think where they would come is we would come to know as the process is going on, and I'm sure you would also come to know as we report to you next time where we are and who the winners are.
Okay, let's move on then. The World Bank will be releasing its doing business report later today. The government is hopeful of a big jump in the rankings because remember, India had performed poorly last year, finishing at rank 130th, which is below Ghana, Uganda, Vietnam, and even the neighboring countries like Sri Lanka and Nepal. Following this, the Prime Minister Narendra Modi had reportedly ordered ministries to work towards improving India's rank and make it simpler to do business.
Well, this time the government is hopeful of a big jump because of all these factors. And the centre has made starting a business easier by cutting the red tape. Construction permits are also given out now faster, and the insolvency code is now operational, which provides an easier exit for businesses. All this, the government believes, should reflect in its rankings. GST will not be part of the rankings for this edition as the cut-off date was June and the tax reform was launched in July.
Well, Tata Steel failed to meet street expectations with its second quarter earnings. This even as the company managed to post a profit of over 1,000 crore rupees. Now, while the performance of Tata Steel's India business was a bit subdued, it is the European operations that really struggled during this quarter. Nigel, what do you make of this? What are the key highlights and how do you see the stock reaction today?
Well, it start off in the red, Anisha. That should be the case, but I want to know what's going to happen from there because even in yesterday's trading session, it seems the street was a tad bit nervous getting into these set of numbers. So maybe, in fact, if it starts off into the red, it'll provide a good opportunity for all those who missed the bus. But that's about the stock reaction. Let's see what happens. The start should be in the red. In terms of expectations and in terms of what they delivered, top line growth of around 25%, that was pretty good. The operating profit as well jumped up by around 50%, pretty okay. But the margin expansion, that was only around 320 basis points approximately. The street would have liked a number of around 450 to around 500 basis points. Telling you, in some of the segments, there was a bit of a miss on the operating margins. The net profit as well did come at around 1,000 crores, but that's really where all the unimportant numbers end. For Tata Steel, you're looking at the geographic performance. You want to understand how they've done in India. Now, in India, we had the sales volumes numbers. That came in pretty healthy. It jumped up by close to around 17% because of the expansion that they've undertaken at Kalinganagar. EBITDA per ton, we were bracing ourselves for a number of close to around 12,500 rupees on a per ton basis. That came in at around 11,000 on a per ton basis. So that was a bit of a disappointment. It came in at the lower end of some expectations. And in terms of what consensus was, definitely it was a bit of a miss. A bit of a miss on Indian operations, but the big miss came in on the European operations. Over there, in fact, we knew that, in fact, sales volumes have come in higher, but lower spreads with higher raw material costs, that's what really, hit their EBITDA per ton. And the EBITDA per ton, as we have calculated, comes in at around $45 on a per ton basis. We were working with a number of around $70 to around $73 per ton. I think the lowest expectation as well was not below $60 per ton. So that clearly was where the big disappointment came. Southeast Asia, small part of a business, but it did well. So good going over there. That, in fact, did deliver a good EBITDA number. What are brokerages saying? UBS, they have a neutral rating, 740 rupees per share. They are saying that owing to the strong run that we have seen on the stock, we could see, some caution coming over there. But they're saying the first half EBITDA number that they've delivered is close to around 47% of what, the consensus estimate is. So, they're definitely going to do what they have, what consensus is for the year. JP Morgan, they have an overweight rating on the stock. They've increased their target price as well to around 880 from around 770 earlier. They're saying near term, yes, we can see a negative stock reaction, but they're saying that the re-rating hasn't really taken place for Tata Steel. They're saying steel demand has improved and there are multiple re-ratings that could take place going ahead, and it remains their pick from the metal and mining space. So watch out on that front as well. Phillip Capital, they have a buy rating. They've tweaked their target price a tad bit. All eyes will be on Q4 because that's a seasonally strong quarter. They're saying that's going to be very, very strong. So start in the red, but from there, let's see whether or not that's a perfect entry opportunity.
Okay, let's see whether that happens or not. But Nigel, from one metal name to another, JSW Steel is also posting numbers today. What are you expecting? Any improvement there when it comes to realizations, etc.?
Sequentially, it'll look good, Anisha. I'm going to be the man of steel, I think, today, because towards the end of trade, we'll be having JSW Steel. 3:30 p.m. is what we'll be looking at in terms of their numbers. Let's run you through the consolidated numbers. Top line growth of around 22%, operating profit jumps up by close to around 11%, and margins more or less steady at around 21% approximately. The net profit number as well is up by close to around 40%, coming at around 1,000 crores. But again, need to look at the operational performance and the EBITDA per ton. That's going to be very, very important. Top line growth. Why are we expecting more than a 20% top line growth? That's going to be driven by higher realizations. Remember, the production numbers we've already got, that's been a tad bit subdued. It's come in lower by close to around 1% on a year-on-year basis. So the entire top line growth is because of higher realizations. The EBITDA per ton, though, will improve on a sequential basis. Why? Improvement in steel spreads. That's point number one. Flat steel prices as well have moved higher, so that's pretty good news. And export realizations as well have done well. And coking coal cost as well are likely to come in lower. I remember when I spoke to the management at the end of quarter 1, they told me that in fact the coking coal cost was $199 on a per ton basis. When I'd spoken to them midway through the quarter, it was at around $175 to around $180 per ton. So straight away that $15 per ton could flow into the EBITDA per ton. So that's why, in fact, we could see a good improvement in terms of EBITDA per ton. And in the middle of the quarter as well, NMDC had cut prices by around 200 rupees. The next month, they went and increased it by 175 rupees. But at least some part of that benefit could flow through. EBITDA per ton number, what are we working with? 8,000 to around 8,050. That will be a good improvement on a sequential basis. On a year-on-year basis as well, it will be pretty good. And keep an eye out on these smaller segments. Coated products business, that has been gradually improving. I remember it used to do only around 100 crores. Now it does close to around 200 crores. And the other one is, their US operations as well. That's the number up for you. That's in fact the US operations. Over there, in fact, the profitability has improved as well. Numbers at 3:30 p.m. likely to come in post-market close.
Okay, so those were the expectations from JSW Steel this time around. But let's move on and check out what are the expectations from Bharti Infratel this time around. Actually, it reported an inline set of earnings, Q2 earnings yesterday. And Ronit is here to take us through the details of that.
So largely inline set of numbers coming in for Bharti Infratel. The revenue was down. Revenue was up around 11% at 3648 crore versus a poll of 3654 crore. Moving on to the EBITDA was up 12% at 1634 crore, largely in line with our poll as well. Margins came in flat around 44.7. The one disappointment in the results was the PAT, which came around at 638 crore versus our poll of 774 crore. So one reason for this was the net finance income came much lower versus our estimates, as well as the company also said they're looking to increase their stake in Indus Towers. So currently they own around 42% in Indus Towers and Vodafone owns the rest of the other 42%. So on the back of these inline set of numbers, you can expect Bharti Infratel to trade largely in the green, active.
All right, so that's about Bharti Infratel. But Ronit, I believe you're on top of this telecom space. You want to tell us about Bharti Airtel as well. They're going to be reporting their numbers today. What to expect there?
So we're expecting a largely muted set coming in for Bharti Airtel. I'll take you through the numbers first. We're expecting a revenue downtake of around 1% at 21,746 crores, whereas the EBITDA also down around 4% at 7,500 crores. Moving on to the margins, we expect around a 400 bips downtake around 35.2, and the PAT also down around 13%. So some of the reasons for the muted numbers are, first is the India mobility business. We expect the revenue to decline largely on account of heightened competition due to Reliance Jio, as many of the subscribers are moving to Reliance Jio, which is leading to the revenue downtick. Next, moving on to quarter 2 is the seasonality weak sector for the telecom sector, as well as the GST rate has been increased to 18% versus the service tax rate of 15%, which they haven't passed this on to their consumers, so this can impact their margins. Third, the data volumes we are expecting to increase around 11% quarter on quarter, whereas the volumes also expecting that flat. Moving on to the Africa business, we are expecting a slight uptick of around 2%. The Africa business contributes around 22% of their revenues. Finally, moving on to the average revenue per user. So we can see in Q1 FY17, the ARPU was 196, and in last quarter, the ARPU came at 154. So any ARPU around 150 to 154 will be positive for Bharti Airtel.
Okay, Ronit, thank you for that. But from the pharma space, Lupin reported an operational beat yesterday. US business declined as expected, but the street took heart from the fact that all other markets grew. Now, the India business, in fact, recovered quarter on quarter with 24% growth post the GST restocking. Here are the management on price erosion due to one of their drugs, metformin, and the status of its plants under the US FDA lens.
This particular quarter, we had the impact of the metformin erosion that we talked about last quarter. that continued into Q2. And we also had the Claris One impact. I mean, that is the reason why the erosion level is a little bit higher. But, you know, on an annual basis, we still expect it to be in the high single digit. You know, what we're hearing from other manufacturers also is that everyone is struggling with pricing pressure and margin pressures, you know, in the last couple of quarters. And most companies are getting to their pain point, the U.S. manufacturers sooner, you know, than the Indian manufacturers, just given the cost advantage. But, you know, we are hoping that we are really at that point where, you know, manufacturers can't really take any more cuts because it's going to impact their ability to manufacture a product on a sustainable basis and can potentially cause supply disruptions.
We've been trying to push the FDA to get an answer as well, and then, you know, unfortunately, you really have no visibility into these processes. But I think we know that, you know, I think typically, as I'm seeing that the FDA seems to take 6 to 9 months to reach closure, and hopefully in the next couple of months, we should have answers for both Goa and Pithampur.
Well, the second half of trade yesterday belonged to Lupin, but today we'll be keeping an eye out on another pharma major. Dr. Reddy's comes out with a set of numbers. Ekta is with us. Ekta, good morning. What do we expect there?
Well, you know, the Dr. Reddy's stock, or maybe the numbers, are probably going to play a similar tune to what Lupin played. So, for example, we are going to see a Q-on-Q recovery to take place for Dr. Reddy's this time. Remember that last quarter, there was quite a disappointment when it came to Dr. Reddy's margins performance. You know, margins came in at only around 10% and there was a profit decline of over 50% So, if you compare this quarter to last quarter's performance, it's definitely going to be an improvement taking place for Dr. Reddy's. So what we're working with is a revenue uptake of around 3% margins, which is probably going to be maintained on a year-on-year basis at 17%, but that would indicate a recovery on a Q-on-Q basis, and a profit which is expected to decline around 9%. Now, in terms of the US business, last quarter the North American business was down 4%. We are expecting the sluggishness to continue for the US business because we just saw Lupin's numbers when it came to the US business, and the US business still looked disappointing with a decline of around 31% year-on-year. And remember that most of these Indian pharma companies are sailing in the same boat when it comes to pricing pressure in the US. So I expect that kind of pressure to probably continue for them. But they did have 1 or 2 key launches, so that should probably support in terms of the downside. I would also expect some recovery to take place in the India business because last quarter India was down 10%. So because of restocking, we've seen Lupin recover. We've seen Wockhardt recover on a Q-on-Q basis. So the expectation is that Dr. Reddy should recover for India as well. Again, commentary will be the most important thing. So, for example, we will want to hear more in terms of what's happening with the Srikakulam facility, with the Duvara facility, as well as what their outlook would be on launches in the US as well as pricing pressure.
Now, from the FMCG space, Dalal will be reporting its Q2 earnings today. Mangalam joins in. Mangalam, strong volume growth is expected this time around, eh?
6% is what the street is working with, strong in light of what the company has been posting before, Nigel. And that is primarily because the previous quarter we saw a large amount of destocking. So some element of restocking is what the street is working with. But for Dabur, remember, the problem is structural. About 60% of its portfolio is in direct competition with Patanjali, 40-45% dependence on wholesale, as well as the 30% revenues that come from international markets. Those countries are having their own issues with regards to geopolitical problems and currency. So all in all, a decent set of numbers which are expected from Dabur. 6% volume growth will be the key highlight. Apart from that, total income growth of close to 4% is what we're working with. Margins to be around that 20.5% mark, which should be similar to what the company had posted in the comparable quarter. And as a result of that, the net profit growth that we're working with is close to about 3.5% as well. Remember, 30% of their revenues come from international business out there. We are expecting a 6 to 8% decline, primarily on account of weakness in currency and the geopolitical problems. Also, watch for exceptional provisions. Remember, the last quarter, company had made an exceptional provision for GST, the kind of repayments that they had made to their channel partners. So if there is an element of that, that is something we'll be watching out for too. lower ad spends, that could possibly aid the margins. That's something that we saw in Marico as well. But then again, remember, Hindustan Unilever went ahead and spent more. So those are a couple of things we'll keep an eye out on. But 6% volume growth, that's the key highlight.
Okay, so 6% volume growth is a key highlight. Mangalam, but talk to us about the primary market as well. Mahindra Logistics come out with its IPO today. It opens today. What are the key highlights? Tell us about the company, the valuation picture and the key concerns.
Absolutely, Anisha. So, you know, Mahindra Logistics, the IPO opens today. Remember, this is roughly about 830 crore IPO offered at a price band of 425 rupees to 429. Last evening, they came out with an anchor book, 247 crores raised at around that 429 rupees mark. Mahindra, the promoter Mahindra and Mahindra, Normandy as well as Kedara Capital are the ones which are offering their stake in this IPO. So there is no fresh issue of shares. The post-listing market cap at higher band should be around that 3,000 crore mark. As far as the company is concerned, they primarily operate in two segments. One is supply chain management. The second is people transport services. So what they basically do in the supply chain management business is provide integrated road transport solutions. And in people transport, they tie up with a couple of IT companies to shuttle their employees around. The key trigger for them really is the revenue increasing from non-Mahindra group clients. So that would be something that I will be watching out for. If you take a look at the financials, last 3 years, the revenue has grown at around 18% CAGR. The net profit, however, has grown at just about 9.5%. That's something that brings me to the concerns. The first one, EBITDA margins, they're paltry at around 2.9 to about 3%. That is something that we'll need to keep an eye out on as far as improvement on that front is concerned. Primarily because the two segments, one of them gives them 6%, the second one gives them 10%. So corporate overheads look like they're higher. Secondly, the working capital days are higher. Most of the amounts are in receivables. And the last 3 years, the company has been posting negative cash flow from operations. So valuations on the higher side, most of the street is working with 100 to 110 rupees as far as the profit is concerned, 110 crores in FY19. That makes the company trade at 30 times, which is higher as compared to the others, especially in light of the margins that they post.
Let's head straight to the commodity corner. Manisha Gupta joins us with a roundup of what's happening in the world of commodity. Good morning, Manisha. Take it away.
Well, thank you so much for that. It's the crude oil price is holding the highest since July 2015, and we have seen further gains building up on this one. Another important cue really is the tightening of the calendar spread, which is at the highest since July 2014 as well. So that tells you that not only are we looking at some rebalancing coming in for demand and supply for crude, but there is some tightening as well. The only thing that's holding prices back really is the prospects of rising shale output, and that is something to watch out for. But in the meanwhile, you also have seen the OECD XX stocks down by 180 million barrels per day. So there are a lot of positive factors now coming in for crude, which have made their way into prices. In the metal space, in the meanwhile, earlier we were looking at the whole sector moving in the same direction, and that was upside. But now it's getting choosy, picky when it comes to metals with stronger fundamentals. So while you have seen the trading volumes in metals highest since in last 2 years, it really has been about a few metals here. So watch out for copper, because you have seen decline in output from Chile, Canada, Mongolia, etc. There also are very positive cues continuing for nickel and zinc, because these couple of metals also are in deficit. So some spaces, it's a mixed trade in metals, but some of them are doing exceptionally well.
Okay, Manisha, thanks so much for joining and giving us those details. Well, let's hop across to Mangalam. He's been standing by. Mangalam, what's going on in the derivatives market?
Well, with a 40-point uptake on the Nifty yesterday, the FIIs, they ended up buying in index futures. That's close to about 200 crores, but not a big number there as well, given the fact that their exposure is still 70% on the long side. The purchase actually happened in index options, near 500 crore worth purchase out there, while the longs were added on both calls as well as index puts. What was actually heartening to see was the FIIs added nearly 3 short puts per short call. That means that they are hoping for some sort of support on the downside. The Nifty November's futures premium, that one's come back to that 25-point mark as compared to 33. But remember, this series, it's all about a lot of the Nifty companies going ex-dividend. So the futures premium, we have to keep an eye out on the adjustments for dividends itself. What was actually interesting is the 10,000 put in the December series, the open interest is actually much higher than what we have in the November series, and that is an interesting one. December 10,000 put has nearly 53 lakh shares in open interest, and remember, there is that Gujarat election in December as well. We'll keep an eye out on that, but yesterday we saw some writing in 10,100, 10,300, 10,400 put too came in for some bit of writing, as was some action seen in the 10,400 call. Wockhardt Pharma, one stock I'll be keeping an eye out on, given the fact that it entered the F&O ban.
Okay, Mangalam, thanks so much for that. Well, on that note, we'll wrap up on Power Breakfast, but as we do that, we leave you with some picks of our bullseye contestants. Thanks so much for watching.
My first stock call for the day will be a buy on Just Dial, which I'd buy with a stop loss at 430 and a target of 450. My second pick will be a buy on Bata India, which I'd buy with a stop loss at 810 and a target of 840. My third pick will be a buy on Escorts, which can be bought with a stop loss at 763 and a target of 788. And my final stock call for the day will be a buy on Container Corporation with a stop loss at 1355 and a target of 1395.
Our first call would be a buy call on Wockhardt for a target of 718, stop loss at 627. Second buy would be on Sun TV for a target of 892, stop loss at 815. Third buy call would be on Mastech for a target of 398, stop loss 354. And final call would be a buy call on Just Dial for a target of 458, stop loss at 429.
The first buy recommendation is on BF Utilities. One can buy BF Utilities for a target of 449 with a stop loss of 415. The second buy recommendation is on City Union Bank. One can buy City Union Bank for a target of 166 with a stop loss of 157.70. The third buy recommendation is on GHCL. One can buy GHCL for a target of 236 with a stop loss of 219.70. And the final buy recommendation is on Havels. One can buy Havels for a target of 512 with a stop loss of 479.50.